Welcome to the Deep Dive. Today, we're talking about something you probably see every single time you shop online. Buy now, pay later. BNPL.
Yep.
It's that slick little button on every checkout page, on Zomato, on Myntra, everywhere. It feels like the ultimate shortcut to getting what you want right now.
It does,
Yeah.
and that's the design. But our source material today pulls back the curtain on the real cost of that shortcut.
Right.
What feels like some casual, harmless credit is actually tied directly to your financial backbone, your CIBIL score. And what we found is that this convenience can and does snowball really fast.
Snowball into a pretty nasty surprise, it seems.
Exactly. A surprise hit to your credit profile that can seriously hurt your chances of getting a big loan later on.
So that's our mission for this deep dive. We're going to unpack that direct link between clicking pay later and what happens to your CIBIL score. We want to get into what these apps are actually reporting and, more importantly, give you a solid game plan for using it responsibly.
And a plan for what to do if you're already caught in that cycle.
Okay, so let's start with the absolute basics. What is BNPL when you strip away all the marketing?
It's a credit product. That's the hard truth. It's not just a payment feature. The technical definition is a short-term microcredit facility.
Microcredit.
Yeah, it lets you buy something immediately and then pay for it in installments, usually interest-free, for a pretty short window, maybe 15 to 90 days.
And the appeal is obvious. I mean, you don't need a huge lump sum. The paperwork is almost zero. It's perfect for young professionals, students, freelancers.
Absolutely. You see that 20,000 rupee phone upgrade, your bank balance is low, but you can get it right now. It removes all the friction.
But that's the trap, isn't it? The perception versus the reality.
It is. Because it feels so casual, people treat it like a temporary hack, a small favor. But it's formal debt. As long as the lender is registered with the RBI, the credit bureau is treated exactly the same as a personal loan.
So it affects your credit health. Now, everyone throws around the term CIBIL score, but let's break that down. For someone who hasn't needed a big loan yet, why should they panic if their score drops by, say, 40 points?
Because that number is the gatekeeper to your financial life. A score over 750 tells banks you're a safe bet. You get loans easily, and you get the best interest rates.
Which saves you a ton of money over time.
We're talking lakhs of rupees over the life of a home loan. But if your score dips below 700 or into the 600s, you become high risk. Banks will either reject you outright or slap you with much higher interest rates.
Suddenly, every big purchase is way more expensive.
Exponentially more expensive. That number has real long-term power.
That really puts the cost of convenience into perspective. Okay, let's get into the mechanics. People might think, oh, it's just a 1,000 rupee purchase. They won't report that. Is that true?
Not at all. Our sources are clear. Every single BNPL transaction, whether it's for 1,000 rupees or 50,000, can show up on your report if the lender is reporting to bureaus like CIBIL.
So it's not the amount, it's the act itself.
It's the reporting mechanism and your behavior. And once it's on your report, CIBIL starts tracking 4 key things. First, timely payments. You pay on time, it helps your score. Great.
Simple enough.
Second is the disaster scenario. Late or missed payments. That triggers an immediate drop and flags your account.
And the third,
The sheer number of accounts you have open. If you're juggling, say, 4 or 5 different BNPL services, it signals to lenders that you're overextended. You look like you're relying on debt to manage your day-to-day life.
that makes sense. What's the fourth factor? You mentioned it's a bit sneaky.
Right, it's the credit utilization ratio, the CUR. This is a huge one. Basically, it's the percentage of your total available credit that you're using. CIBIL likes to see that number stay below 30%.
Okay, so with my credit card, if my limit is 1 lakh and I spend 30,000, I'm at 30%. Easy. But BNPL limits are tiny, right? Maybe 5,000 rupees.
Exactly. So what happens if you use that full 5,000 rupee limit on a shopping spree?
Uh-oh. I've hit 100% utilization on that account.
You've hit 100%. Now, imagine you do that across 3 or 4 different BNPL apps. The bureau doesn't see small amounts. It sees a pattern of someone who instantly maxes out every single line of credit they get. It's a massive red flag.
Yeah. Okay, so it's the habit, not the total amount.
It's absolutely the habit.
Let's make this real. The source material had a case study about a designer named Neha. Can you walk us through that?
Yeah, Neha's story is a perfect example. She's a 25-year-old freelance graphic designer. She used a BNPL service to buy a 20,000 rupee smartphone. Totally manageable, she thought. 4 easy EMIs.
But then work slowed down.
Work stalled and she missed 2 payments. And she really just thought it was like, casual credit, no big deal. The consequences were brutal.
What happened to her score?
It plummeted. It went from a really healthy 720 all the way down to 680. in 1 month.
A 40-point drop.
Just like that. And that pushed her into the risky category. So when she went to apply for a small personal loan a few months later, she was either denied or offered these insane interest rates, all from 2 missed payments on one phone.
That's terrifying. So this brings up the obvious comparison. BNPL versus a credit card. They both affect your score, but why do the sources say BNPL has a high risk of overuse?
It's all about the psychological barrier, or rather the lack of one.
What do you mean?
Getting a credit card is a formal process. You apply, you wait, you get a physical card, you know you're taking on debt. BNPL is completely frictionless. It's just one click at checkout.
It feels like it's part of the shopping experience, not a separate financial decision.
Exactly. That low barrier just fuels impulse buying and what we call micro debt stacking. You miss a credit card payment, you know it's serious. You miss a 1,000 rupee BNPL payment, it's easy to brush off.
But if you have 5 of them,
Right. If you have 5 different BNPL accounts for groceries, clothes, gadgets, and you miss one small payment on each, you suddenly have 5 negative marks on your CIBIL report.
and the fallout is quick. Walk me through what happens the moment you miss a payment.
Okay, so first, the provider starts sending reminders and they hit you with late fees instantly. Second, they report that delay to the bureau. Your CIBIL score drops
Immediate.
immediately. Third, that late payment or defaulted stamp becomes a permanent part of your credit history for years. And the real danger is that a few of these can slash your score by 50, even 100 points. You could get blacklisted from getting a mortgage down the line.
So given that BNPL isn't going anywhere, we need a plan. How do you use it without, wrecking your financial future? We've pulled 5 key tips from the research.
Okay, number 1 is crucial. Track all your active accounts. Don't just rely on the app's emails. Put the due dates in your calendar. Use a spreadsheet, whatever it takes. Don't let them overlap without a clear repayment plan.
Tip 2 is pretty straightforward. Pay on time, every time.
And set up autopay if you can. The sources are so clear on this, a 1-day delay can be reported. There's no informal grace period here like you might get with some credit cards.
Okay, so what's number 3?
Use the tool responsibly. This means don't use BNPL for your essentials. If you're using it to buy your monthly groceries or pay your utility bills, that's a huge warning sign of a cash flow problem.
So save it for planned one-off purchases only.
Exactly. For things where you know the money's coming in soon.
Tip number 4, be proactive.
Yes. Check your CIBIL report regularly. You can get a free one every year. If you see a mistake or a delay reported for an account you paid off, you have to dispute it immediately with both the lender and the bureau.
Don't wait until you're applying for a car loan to find out.
Please don't. And that leads to tip 5. Do not ignore them. If you miss a payment, the worst thing you could do is ghost the provider.
Just burying your head in the sand.
Right. That just leads to escalation. Instead, respond to their emails. Communicate your situation. Often, you can negotiate a solution before it becomes a permanent black mark on your record.
Okay, let's shift gears. What if someone is listening to this and they're already drowning in it? They're juggling multiple BNPL loans, collection agents are calling. That kind of pressure is just paralyzing.
It is. And if you're in that spot, trying to deal with multiple creditors on your own can feel impossible. But there are specialized debt solution platforms designed for this exact crisis.
And what do they actually do besides just giving advice?
They offer very practical help. First, they create a customized debt management plan. They consolidate everything, BNPL, credit cards, other loans, into one single manageable payment.
Okay, that's a start.
But here's the game changer. Some platforms, like SingleDebt, which is mentioned in our sources, have a paralegal team.
A legal team.
A paralegal team, yes.
Yes.
They legally take over all communication with your creditors. The calls, the emails, they stop coming to you. They go to them. The mental relief from that is massive.
I can only imagine. That alone must be transformative.
It is. And from there, they give you a structured path to actually rebuild your CIBIL score, and they can even provide legal representation if you're being harassed by aggressive collectors. It's a pathway back to control.
So this whole deep dive really boils down to one thing, doesn't it?
I think so.
The big takeaway is this. BNPL is credit. It's not some harmless payment hack. You have to treat it with respect, repay it on time, and absolutely do not stack multiple loans.
And before you click that little button on your next purchase, we want you to ask yourself 3 really direct questions. If the answer to any of them is no, just walk away from the cart.
Okay, what's the first one?
First, can I guarantee 100% that can repay this on time every single time.
Second, is this purchase actually necessary right now, or does it just feel easy because I can delay the pain of paying for it?
And finally, the most important one. Am I willing to risk a serious, long-term drop in my CIBIL score for this one impulse buy?
Think smart, shop smart, credit smarter. Taking control of these habits today is really the only way to protect your score and secure your financial future.